Yo, what's going on, guys? Bexio back, and today we got a brand new video. This time talking about Bitcoin, comparing something that's trending on Twitter, which is WTF happened in 1971. That is the day that the gold standard was ended. But before we jump into that, there is a large percent of you guys watching who aren't actually subscribed. So if you enjoy this video, make sure to smash that sub button because we are on the road to 1,000 subs. So as we know, the gold standard was abandoned a while ago, and it is the 50th anniversary today of when it was actually taken away, and the fiat currency system was put in place. So that was August 15th, 1971, and you can see it was Nixon that actually ended up doing that.
The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
So after he decided to take everything off the gold standard and introduce fiat currency that we know today, that's when a lot of things really changed. And that's where this site comes in handy. This is what's trending on Twitter. The, WTF happened in 1971. This is just tracking a lot of things and comparing them to like different growth things, how inflation was hit, and how a bunch of different charts were affected. I mean, this one is something that I think even right off the bat, and I think a lot of people might not truly understand. And this is what like Bitcoin fixes and can do everything for. And as you're looking at growth and productivity and hourly compensation, up until 1971, it was very close together. They were basically going hand in hand at 90.84% was basically both of them. And then you see this huge divergence, productivity skyrockets, but compensation plummets. And that's just with a currency where it's not based off anything, you can make a lot more money of it. So you can use it to do a bunch more stuff. Like Apple can make a bunch more money and raise their productivity, get debt, and easily get debt because they don't have to go and get debt where it's backed by gold. You run into whole different complications of how debt works when it's backed by something. But they can go get easy debt, skyrocket their productivity, and then what happens is they get to be a $2 trillion company, and employees who used to be, compensated where the company would have been much smaller, but the employees would have been compensated the same. Then you look at less inflation stuff, and investors track things, but the productivity to compensation ratio completely separate at this point. And you can see like this too shows the income growth of stuff from the top 1% of earners compared to the bottom 90% of earners. When there was this gold standard, there was the 90% of earners had the most income growth. And the reason that makes more sense is because you can't do like bailouts or print a bunch of money because it's backed by something. So the majority of people would have the majority of the money because it would just be spread across them that way. Now we have places where just think of stimulus bills and stuff where those were what, like $1, $2, $3 trillion bills, and it was a fraction of that was for stimulus. So I don't know, like $100 billion is just made up numbers, but was for stimulus. And then the rest of the 1.9 trillion, where'd it go? It went into the business, the large corporations and the rich and the top 1%. And that's where you get all this stuff where even the banks, when the banks got bailed out, they got more money. The money came from the 90% and was given to the big banks, the 1%, and they get a bunch of money for being irresponsible, getting bailed out, and now they're good to go. And now they just have a bunch more money. So with a gold standard, you can't do that because of how it's backed. You can't print a bunch of money because that would devalue your money against that gold. And for the U.S., when we were the reserve currency and compared to gold, and was being able to be traded in for gold. You could take $20 bill and go get $20 worth of gold for that. You couldn't just print money, and that's how the majority of the money stays with the majority of the people. And then even things like this, you see a relentless 50-year decline in wages. Same exact thing goes into effect here, where the money's more spread out to get wages and stuff. It's just the majority of the people get the majority of the share because of it being backed by a hard asset. As soon as that's not needed, then the wage stays the same. You get to keep the same wages, but the growth of a company or something explodes, and they can easily get a much more amount of money by taking on cheap debt, easy debt, and using that to make more money without needing to actually pay more people to work for them. And then one of my favorite things on this entire site is the cost of living in 1971. This just shows you how much inflation has destroyed your savings and the dollar and things like that, where just these prices. A new house, $25,000, and the average income was $10,622 per year. So in 3 years you could afford a new house. The average income cannot afford a new house in 3 years right now. And actually there is a chart to show that on this later on. But a new car, 3,500. What new car you're looking at least 20, 30,000. Average rent of 150 a month. Like, these prices are insanely small. And when you compare them to the income is where you start to really see how inflation screwed people, because there is still, minimum wage things would be about this same thing, but the average income would be somewhere around 60,000. But 60,000, and then what, you could buy almost 3 cars in 1 year, new cars, off of this average income. But off of $60,000 now, you could only buy what, maybe 2 if you get like the cheaper new cars, like 20,000, to make sure. I don't even know if 20,000 is a good like point to do that, but if you can find a new car for that, it's not going to be like a super up to date new car or high tech car. It's going to be basic stuff. Even things like the inflation of Campbell's condensed tomato soup, they have a chart for. Literally, you see it. This is 1971 skyrocket. As soon as you introduce the ability to just print your own money without it being backed by anything, you introduce this inflation that can hit and go crazy. What, it was like 10 cents for one in 71, and then now we're looking at almost $1. So that is ridiculous inflation. Still, the inflation levels you see from now in 2015, this chart, 2,326% for cumulative inflation. So that's ridiculous numbers. That stuff, like, that's devastating to people's savings and anyone who wants to save money. And the final chart we're going to look at for this site is going to be these housing rates, because housing is something that's very affected by interest rates right now and printing money and doing that. The real estate market, as we all know right now, is insanely inflated. But looking at this, when there was a gold standard and stuff, these things were relatively inbound. You see, the median income for Boston and New York was around the median price for New York and Boston. So if you had median income, you could afford the median house. You basically could afford a house in New York or Boston working an average job. And now we see that because off this gold standard into fiat currency, these inflationary cheap debt, easy debt stuff is where this explodes. The market takes off, but then the median salaries and incomes don't take off. They don't do the same parabolic moves, because that's not how the asset or the market works. When you pump a bunch of money into a market, you're going to see prices go up, but you're not going to see incomes go up by pumping money into something. Finally, a chart that is going to be probably shocking to a lot of people, that is the reason why Bitcoin is so important, and it's going to be something that can really set the money standard back on track, is the S&P 500. This is an index that people point to for investments, things that you can put your money in and know that it's been safe, it's 20 years plus, has never been negative, and it's been a good investment. But when you price it against Bitcoin, a hard money asset, something that you can't print, you can't make more of, it is in a ridiculous downtrend. It is becoming much and more worthless compared to Bitcoin than it is compared to the dollar, which isn't backed by anything. So that's the same thing we're seeing. That's why Bitcoin can replace like gold and this new standard type stuff with in a world where money actually means that you can use it to save, use it to actually move forward instead of getting trapped in a place where money printed means you lose purchasing power, but the top 1% and big corporations, they're the ones that get all the money anyways. So it's just something to think about with Bitcoin and how it can actually be this hard money asset that we all need. So guys, that's going to do it for this video. Just a little thing to kind of go off what today is all about and been like trending on Twitter and stuff. The gold standard is gone. Fiat came in, and we've seen how much of a mess that it has created. So Bitcoin is the fix. We're in a digital era now. We can't go back to gold. That just wouldn't make sense. But we can go forward into Bitcoin. So as always, guys, don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. See you guys in my next video.